Do you know what skills you need before investing your money in the stock market? Most people think it's just about picking the right stocks, but it's so much more than that. It's about understanding how the market works, managing your risk, and making smart decisions with your money. In this video, we're going to break down the essential skills you need to succeed in the stock market. We'll cover everything from basic financial literacy to analyzing companies and avoiding common investing mistakes. Whether you're just starting out or you've been investing for a while, this video will give you the knowledge and confidence you need to take your investing to the next level. So if you're ready to learn how to invest like a pro, grab a notebook and let's get started. Before we dive into the specifics, let's address the elephant in the room. Is the stock market right for you? Now, I'm not here to tell you what to do with your money, but I do want you to understand that the stock market is not a get-rich-quick scheme. It requires patience, discipline, and a willingness to learn. First and foremost, you need to be willing to invest the time to educate yourself. The market is complex, and there's always something new to learn. If you're not someone who enjoys expanding their knowledge base, then investing might not be the best fit for you. Secondly, you need to be comfortable with risk. The value of your investments can go up and down, and there's always the potential to lose money. If you're someone who panics at the first sign of a market downturn, you might want to reconsider. Finally, you need to be disciplined and patient. Successful investing is a marathon, not a sprint. It's about making smart, calculated decisions and sticking to your long-term strategy, even when things get tough. If you're easily swayed by market hype or the fear of missing out, you're likely to make impulsive decisions that could cost you. Now that you have a better understanding of the mindset needed to approach the stock market, let's talk about the fundamental knowledge you need to acquire before even thinking about putting your hard-earned money on the line. First things first, you need a solid understanding of basic financial concepts. This includes things like stocks, bonds, stock indexes, diversification, and risk. You don't need to be a financial expert, but you should have a grasp of these fundamental concepts before you start investing. It's also important to understand the difference between investing and speculating. Investing is about buying assets with the goal of holding them for the long term, while speculating is more about trying to make a quick profit by timing the market. As someone who's been in real estate and business for years, trust me, slow and steady wins the race. And of course, you need to have a handle on your personal finances. This means creating a budget, tracking your spending, and making sure you're living within your means. Investing should be done with money you don't need for at least 5 years, not money you need to pay rent next month. All of this information will be discussed separately on this channel, so feel free to watch if you enjoy learning through videos. However, I have to be honest, the best way to really learn and understand the principles of the stock market is by reading books. There are countless books about the stock market out there, each catering to various levels of difficulty. If you'd like me to make a separate video reviewing the best books for each level, let me know in the comments below. For now, I can tell you that one of the best books for beginners is Fundamental Analysis for Dummies. Don't let the title fool you. This book breaks down complex concepts in a clear and concise way. Remember, knowledge is power, especially when it comes to your finances. Chapter 3, Mastering Analysis and Decision-Making. All right, so you've got the right mindset and you're brushing up on your financial literacy. Now let's talk about how to actually analyze investment opportunities and make informed decisions. There are two main approaches to analyzing stocks: fundamental analysis and technical analysis. Fundamental analysis focuses on the intrinsic value of a company. It involves digging into financial statements, understanding the company's business model, analyzing its management team, and assessing its industry and competitive landscape. Technical analysis, on the other hand, uses charts, trends, and indicators to identify patterns and predict future price movements. It's all about understanding market psychology and identifying buying and selling opportunities based on historical data. Now, I'm not going to lie, both of these approaches can be quite complex and require a lot of practice to master, but don't worry, we'll be covering both fundamental and technical analysis in detail in future videos. One of the most important skills in investing is learning how to control your emotions. The market is driven by fear and greed, and it's easy to get caught up in the hype. When everyone is buying, you might feel pressured to buy too, even if it's not the right decision. Similarly, when the market crashes, you might panic and sell everything, locking in your losses. Remember, successful investing is about making rational decisions based on your analysis and your long-term goals, not on your emotions. It's about tuning out the noise and sticking to your plan. Chapter 4: Avoiding Rookie Mistakes. Even with the best intentions, it's easy to make mistakes, especially when you're just starting out. So let's talk about some of the most common mistakes beginners make and how you can avoid them. One of the biggest mistakes is investing without a plan. It's like setting off on a road trip without a map or GPS. You need to know where you're going and how you're going to get there. Your investment plan should outline your financial goals, your risk tolerance, your investment timeline, and your asset allocation strategy. Another common mistake is following hot tips instead of conducting your own research. Just because your friend from college made a killing on a certain stock doesn't mean you will too. Remember, everyone has their own financial situation, risk tolerance, and investment goals. Finally, never invest in something you don't understand. Whether it's a company, an industry, or a specific investment product, if you can't explain it in simple terms, you shouldn't be investing in it. Don't be afraid to ask questions, do your research, and seek advice from trusted financial professionals. Your future self will thank you. Chapter 5: Weighing the Rewards and Risks. Now, before we wrap things up, let's talk about the potential benefits and risks of investing in the stock market. Let's start with the good stuff. The stock market offers the potential to build significant wealth over the long term. Historically, the stock market has delivered an average annual return of around 10%. Of course, past performance is not indicative of future results, but it does demonstrate the power of compounding over time. However, it's crucial to remember that investing in the stock market also comes with inherent risks. The value of your investments can fluctuate, and there's always the possibility of losing money, especially in the short term. The key is to approach investing with a long-term perspective and to understand that market downturns are a normal part of the cycle. Remember, the stock market is not a guaranteed way to get rich quickly. It requires patience, discipline, and a willingness to ride out the ups and downs. So there you have it. As you've seen, investing is not just about earning money, it's about developing your knowledge, honing your skills, and cultivating the right mindset. It's about taking control of your financial future and building a solid foundation for yourself and your loved ones. Each of the aspects we've discussed today, from understanding basic financial concepts to mastering analysis techniques and avoiding common mistakes, will be explored in detail in upcoming videos on this channel. I'm committed to providing you with the information and resources you need to become a confident and successful investor. Make sure you subscribe and hit the notification bell so you don't miss out on any future content. And remember, the best time to start investing was yesterday. The second best time is today.